Hello everyone, it's Friday and you're watching Within the Frame. I'm Kim Bo-kyung. South Korea's economy is facing growing uncertainty. Exports fell for an 8th consecutive month in May due to weak demand for a key item, semiconductors. Though some are saying China's reopening will give a boost to recovery here, this has so far been proven to have had a limited effect. With a U.S.-China chip war raging, it has become much harder for semiconductor manufacturers to find room to maneuver. What strategy does the chip sector need, and could this lessen the pressure on companies in the second half of the year? For an in-depth analysis, we have invited Professor Kim Se-won from Ewha Women's University. Professor Kim, welcome.
Thank you for having me today.
And we also have Professor HWAGYUN Kim of the Mays Business School, Texas A&M University. Professor Kim, good to see you.
Good to see you.
Now, as both of our experts happen to have the same last name, for your convenience, I plan to call Mays Professor by his first name. HWAGYUN, thank you for your understanding.
Great, no problem.
All right, first question to our Professor Kim. Now, the manufacturing sector's inventory level has reached 130.4%, the highest since data was first compiled in 1985. And the rise was led mostly by a drop in chip exports. Now, how serious is this economic situation given these figures?
By definition, inventory means not sold products. So rising inventory is generally understood as a signal of coming economic downturn. Korean manufacturers' inventory to sales ratio in April reached its highest point since the 1985. That means that the size of inventory compared to the sales is even larger than those of 1997 Asian financial crisis and 2008 global financial crisis. In particular, the inventory sales ratio of semiconductor and petroleum sector rose sharply, indicating that they are the biggest victims of the global demand slump and economic downturn. In April, semiconductor inventory increased by 32% on month, and petro inventory also increased by 15% on month. Another gloomy signal of economic downturn is that the retail sales, a gauge of private spending, decreased 2.3% on month in April amid higher inflation and borrowing costs.
Right, I see. So it is a signal of economic downturn. Now, Professor Kim, I'd like to ask you about how a drop in chip exports could impact the GDP. Now, according to the KDI, the GDP falls by 0.78%, the chip exports the GDP falls by 0.78% when the chip exports fall by 10%. Now, how dependent is South Korean economy on chip exports? And how is the slow chip export recovery affecting Seoul's economy right now?
Slowing chip export gives a huge impact on Korean economy because chip is the #1 export item to Korean economy, which covers about 20% of total export. As chip export declines quickly these days, Korean economy as a whole also further declines. This year, chip export declined about 40% compared to last year. So assuming that KDI's estimation on the numerical relation between chip export and economic growth is correct, declining chip export drags down Korean economic growth by 3% this year. And slowing chip industry is the main factor that Bank of Korea and KDI all slash this year's economic growth forecast recently. Bank of Korea cut Korean economic growth forecast down to 1.4% from previous 1.6%. And the KDI, which is the largest Korean government think tank, also cut the growth rate forecast from 1.8% to 1.5%. Both institutions believe that economic growth for this year further adjusted downside if global chip market does not rebound by the end of this year.
Right, I see. Now, HWAGYUN, China's reopening was expected to give a boost to the South Korean economy because it is largely export-driven and China is a major trading partner for the South Korea. However, the effects remain quite limited. Why is this? And as the Korea International Trade Association said, will China's reopening gradually lead to recovery in the Korean chip industry in the second half of this year?
Well, there are a couple of reasons probably. So one of the reasons would be China's reopening so far spurred the growth of consumption in service sector. I think this is understandable because major parts of the service sector consumptions will be held in outdoor settings, and naturally this is going to increase the outdoor activities in nearby area within China. So it's more like a domestic consumption. According to some study by BOK, the Bank of Korea, the Chinese economic growth can increase definitely the Korea's economic growth more in case of the manufacturing consumption goods, but much less for the service consumption goods. So one related thing is the Chinese tourist so far hasn't come back to Korea that much, and also the Chinese government has not yet completely allowed the group tours to Korea. So that's one of the reasons. And then finally, as Professor Kim pointed out, the inventory level of the chips and these major products actually is pretty high, not just in Korea, but also in China. Therefore, it's going to take some time for them to digest their own inventory until we see some strong demand coming back.
Right, I see. We'll have to wait and see. Professor Kim, what's aggravating the difficulties faced by chip makers is, of course, the power struggle between China and the U.S. How is this issue developing?
The policy target of U.S. On global chip market is very clear. They want to construct their own chip industry system with Japan, Korea, and Taiwan, and of course without China. The future of Korean chip industry will be determined by how Korea manages the situation over the serious conflicts between U.S. and China on chip production. Recently, Beijing banned U.S. chip manufacturer Micron's sales in China. And it would be a chance for Korean chip producers like Samsung Electronics and SK Hynix to increase market share in China. But actually, I think it is a very well-designed strategy of Beijing to dismantle the chip production alive by providing benefit or larger market to Korea. So Korean chip producers are not likely to expand their sales in China by substituting Micron's chip supply.
Right, that's exactly why South Korea is taking a very cautious stance between the U.S. and China. And that could be seen much clearly in statements released after the APEC trade ministers' recent meeting, actually. The Chinese Commerce Ministries claimed that ministers agreed to enhance talks and cooperation in the chip sector, but the Korean Trade Ministry said they only talked about the necessity of such cooperation. Could you briefly tell us more about what dilemma Seoul is facing right now, Professor Kim?
As we talked about, this is an important time for the future of Korean chip industry over the conflicts between U.S. and China. Korean government takes very cautious steps over demands from Washington and Beijing. U.S. dominates actually chip production technology, including patents, but China covers almost 60% of Korean chip export. Beijing understands that chip is one of the most important products for the development of Chinese economy to the higher technology-based economy. So Beijing can't quite give up chip imports from Korea. Given these circumstances, Beijing released an agreement that highlights further cooperation on chip production between Korea and China after APEC meeting last week. But Korean Department of Commerce kind of devalued the meeting with Chinese counterpart without any official agreement.
Right, I see the point. Now, HWAGYUN, meanwhile, the IPEF's 14 members reached a deal regarding supply chain resilience. Now, what are the details and how is this going to worsen Seoul's dilemma?
Well, this IPEF, which is Indo-Pacific Economic Framework for Prosperity, includes 14 countries, including Korea, Japan, and US, and some other Indo-Pacific countries. So in a nutshell, the basic idea of this thing is to share the risks related to trade and supply chain. And there are some other things, other pillars, such as like clean economy or other things, but the major item, I believe, is supply chain risks, as we saw from like these US automakers chip shortage problems, and also we had some issues with the urea waters. So these kind of things can be resolved a bit if we, these countries who have either materials or technologies or production processes, can share the risks related to these. And they have some very specific items like the resiliency, efficiency, productivity, etc. But as I just said, it's going to be about how to coordinate with each other in case their major trading partners cannot provide enough products or the materials, then can we share the risk? So in that sense, this is a nice the setting or the policy tool so that they can reduce this type of risk. And also it's not as much emphasized, but I think if you look at the US side of the Treasury of the announcement, they also focus a lot on the trade pillar of this IPEF part, which also clearly related to this China-US tension and trade war type of things as well.
Right, I see. Now, Professor Kim, Washington and Tokyo are especially strengthening ties in semiconductors recently, and with both vowing to deepen cooperation in the research and development of advanced chips. Then some are expressing concerns for South Korean chip makers that Seoul could be left behind. Should we really be worried about this?
I think so. If we take a look at the history of global chip market, Japan used to be the most competitive chip producing country until 1990s. But all Japanese chip manufacturers disappeared in the middle of chicken game with Korean chip producers in 1990s and 2000s. And it should be also noted that Japan is still very competitive in chip producing materials and parts. So as US and Japan deepen cooperation in the research and development of advanced chips and other technologies, there comes high possibility that Japanese corporations would recover chip production competitiveness against Korean producers. Actually, that's what Japan's Kishida government hopes for in the future. That means that the only way to maintain the top competitiveness in chip production, Korea should more extend research and local production in US and Japan. It also means that Korea should be more participating in the quadrangle chip alliance among US, Japan, Taiwan, and Korea.
Right, quite concerning aspect for South Korean chip makers indeed. Now, Professor Kim, I'd like to ask you one more question. Since the successful launch of OpenAI's ChatGPT recently, NVIDIA's value has kept ballooning to the point where it has gone to $1 trillion company, right? And watchers are expecting this AI boom will bring about recovery in the chip sector and be helpful for South Korean chip makers. Is this what we can really lean on?
That's correct. Actually, global chip demand is largely affected by global events like World Cup and COVID pandemic, and also technological advances like video streaming and smartphones hugely affect global chip demand. So the recent popularity of ChatGPT, which is AI-based searching engine, and NVIDIA, which fastens the speed of AI-based operations, provide another big wave of memory chips. Technically speaking, NVIDIA's graphic chips and Korean memory chips are complementary to each other, like coffee and sugar. As the demands for NVIDIA's graphic chip increase, the demands for Korean memory chip also increases. So as more AI-based products are introduced, there will be more demands for Korean memory chips. It could bring chip market recovery and Korean economy's recovery earlier than expected.
Right, that's quite reassuring to hear. Now, HWAGYUN, shifting gears a little bit to the Fed's rate-setting meeting in June. Now, stocks did rally thanks to the end of the debt ceiling saga. However, concerns linger in the market as Fed's rate decision is soon coming up. Now, some Fed officials are signaling to keep interest rates steady. What would be the reasons behind this?
So, I just looked at the Fed Watch, which is the CME Group's kind of indicator. So what's the probability of the rate going up versus not? And about a week ago, in fact, the rate increasing by 25 basis points has higher probability, around 65 to 70%. Now I think it's flipped, probably in part because of some of this announcement by Fed officials. And one of the reasons is when we see typically the interest rate increases, target rate increases, there are a couple of things. One is definitely inflation or expected inflation. So if expected inflation is higher than certain threshold, then typically the Fed tries to preemptively move by increasing the interest rates. But at the same time, they also look at the real economic activities, such as the GDP growth, like the output gap measure is the difference between actual output versus the potential output. If this is also very high, then this also adds to the possibility of increasing the interest rate. They also look at unemployment rate data. So if the economy seems to be overly inflated because of this, the very active labor market, then they also are likely to increase the interest rate. So there are multiple things. And here, at least in terms of inflation, still higher than what they want to. But in terms of the real economic, the data such as the output growth or the unemployment part seems to be lagging and continues to be lagging. So clearly there are some chances that they want to stay a little longer to see how the recession type of the possibility is going to be around. So they tried to wait for the June, and in July, when more data come, then I think they'll probably make more distinctive decisions. So if you look at the Fed Watch for the July one, it's still 40, 40, 20, or 50, 50, so they don't know. But at least for the very next one, which is the June one, now I think it's about 70% chance of the staying put, and then about 30% just increasing. So still the uncertainty exists, but more likely to be staying put.
Right, I see multiple factors to consider. Now, HWAGYUN, even if the Fed forego that decision this time, it is widely expected as because of your what you have said earlier, the U.S. Central Bank will retain the option to make further hikes in the coming months, right? And this is because, like you said, the U.S. inflation rate is still far above the Fed's target of 2%. How do you expect it to be more specifically? And if it does make that kind of decision, how is this going to affect South Korean economy that is already struggling?
So the U.S. has sort of like bad experience in the late 70s when they actually start seeing the interest rate increasing and inflation increasing. They tried to be preemptively move, and they thought the inflation was going down. But then this horribly failed, and the interest rate actually went back, the inflation went back a bit again, and then volatility was very high. So this bad traumatic experience probably gives some lingering sort of thoughts to Fed officials that they really have to move preemptively so that this type of thing is not repeated. So that's one of the reasons that the Fed still is not giving up. And they think that there's a chance that inflation can just increase back, and then they want to definitely just remove this type of possibility. So they keep just looking at the data. At the same time, as you may know, some of the bank failures happened, and this is somewhat less expected from the Fed's point of view, because when they initially increased interest rates, obviously they think that the banking sector is going to benefit from this, because usually higher interest rate is going to be more profitable environment for the banks, because they can charge higher interest rate to their loans as the products. However, somehow it's still a research project for many people, but the banks purchase treasuries and corporate bonds. And when typically interest rate going up, these bond prices will go down, therefore their value of assets go down. And this triggered a lot of the banking issues recently, and then some banks in fact failed and filed for bankruptcy. So the Fed now worries about like a bank instability, because this has very big contagion effect. And the key to success of the monetary policy depends a lot on the stability of the banking sector. So if the banking sector is kind of struggling, there's no point. So they also try to carefully look at this part as well. So that's actually why there's a chance that they will increase the interest rate, looking at how the banking sector responds. So that's one of the things. Coming back to your question about the Korean economy, clearly when the interest rate goes up from the US side, then the exchange rate is going to be one of the major impacts for the Korean economy. Typically, when exchange rate is going up against the dollar, that should have some positive impacts on exports. So it should be a good thing. But so far, we didn't see this much of the effects, because usually there's a J-curve effect. So again, the delayed effects happen, and there are other factors nowadays because of the political risk, etc. So overall, eventually it's going to have some positive effect, but if the US economy is slowing down in recession, this leads to global recessions, and that's going to be bad news to Korea. So it's still somewhat uncertain, but we have to keep looking at this. And also the Bank of Korea probably has to move accordingly, because if you just keep lowering the interest rate or just staying the interest rate at this level, there's a chance that there will be some issues because of the big interest gap between the two countries.
Right, I see. Well, thank you, HWAGYUN, for your easy explanation for us to better understand this difficult Fed decisions and the impact on South Korean economy.
Sure.
Now, thank you. Now, unfortunately, this is all the time we have for today's edition, but thank you, Professor Kim Se-wan and Professor HWAGYUN Kim, for your insights. We really appreciate it.
Thank you very much.
Pleasure. Thank you.
All right, that's all for Within the Frame tonight. We'll be next Monday with more in-depth stories. Thank you for watching. Enjoy the weekend and goodbye.